Hello, my name is Michael Swanson. I run the website wallstreetwindow.com, and I run a private group for high net worth investors and stock traders called Power Investor. Well, I'm doing this video on Thursday night, January the 7th, and Monday marked the first trading day of the year, and we have seen a vicious decline in the stock market. It's pretty much fallen 6 days in a row, and there's two main points I want to share with you in this video. First of all, in the big picture, what does this drop represent? And then we're going to talk about the short-term action and whether or not we can get a bounce here, and I think we actually can. But before I talk about the short term, it's very important to understand that the market is declining because it's making a transition or completing one into a bull market. You see, stock markets and all financial markets, they move in cycles. You have typically they last 3 to 5 years. This last bull market cycle lasted a little bit longer than that. But there were signs last year that the market, frankly, had completely topped out in July. There's three things that bring the end of bull markets, and they all happened last year. One is wildly bullish sentiment. Second is high stock valuations. And third is internal deterioration inside the stock market. And that was very pronounced last year because most stocks fell and only a few stocks went up. It was really about 24 stocks, the S&P 500, that went up a lot, that helped the market averages not decline a whole lot by the end of the year. The Dow and S&P 500 were down just a little bit. They could have been down a lot more, but these 24 or so stocks helped the market up. And now, by the end of the year, those stocks that people were focused on the most were the so-called FANG stocks: the Facebook, the Amazon, the Netflix, and the Google. So when last year began, a year ago, people were expecting big gains to come in the stock market because the stock market had gone up for 2 years at a 45-degree angle without pulling back in 2013 and 2014. So when the year began in 2015, that January, people were thinking the same thing was going to happen again. That's typically what happens to people. They see the market action of the past year and think that's just going to repeat. So as we began this year, people were kind of thinking that the market really couldn't have much of a big pullback at all because it hardly pulled back at all last year. And then when it did have a sharp drop in August and September, it came back in October. It didn't make a new high, but it rebounded fairly hard in October. And everyone on television has been saying the market's in good shape. In Barron's at the end of the year, there was an issue where the strategists on Wall Street were all predicting a big gain of 10% or more for this year. So what happened? Well, of course, the year came and the bottom fell out of the stock market, and it's really been very nasty. And this represents a continuation of the transition into a bear market. It's not completed yet in the sense that we're not at a point where we're going to have a decline that's going to go on months and months and months. That's likely to take place later this year because right now, at this moment, the market is very oversold. On Thursday, the VIX, which measures fear in the stock market, went up 20%. The ratio of down to up volume on the New York Stock Exchange and the NASDAQ was close to 90%, meaning 90% of the orders or close to 90% of the orders that were hitting the exchange were hitting the bid. It's intense selling pressure, and typically when that happens, you get some sort of a bounce. In a bull market, you get a real bottom that can lead to big gains and new highs, but we're not in that sort of situation. So we can expect a bounce that would be like a 3 to 4% move last a few days, maybe a week at the most. And that's just a tough situation. So that's where we are. What does this mean I think people should do, or you should do, or think about? First of all, if you've been stressed out, even under financial pressure, some people on margin even in their trading accounts, with the losses that have hit the stock market this week, if you can help yourself, I would not sell Friday when the market opens up, or maybe even in the next couple of days. I would wait for a bounce to first take place, and that's the next thing you have to think about is, what do you want to do for the rest of the year? Do you want to adapt and adjust to this changing market environment, as you've seen a whiff of it in the stock market? Because think about January 2015, when everyone thought the stock market was going to go up like it did the previous 2 years, and it didn't. Finished down fractionally, and this year people, once again, they think what happened last year is going to repeat and the market won't really do anything. Well, you've seen this week that volatility is going to be the big trend of 2016. Volatility hit a historic low last year. A lot of people, frankly, just fell asleep by the end of the year, didn't really think they had to pay any more attention to what was going on in the stock market. That's totally changing right now. Already began to change, is the fact of the matter. So what are the best ways to adapt and adjust to this market? Number one, don't chase the fad stocks they talk about on television that were hot in 2014. Instead, only buy into the few sectors and asset classes that are going up no matter what the stock market does, and in fact can benefit from the reasons that the stock market is in trouble. And I'm not going to get into that in this video. Will be going on and on forever if I were to do that. So look at what's gone up this week, even though the stock market fell, and focus on only investing and buying into those sectors. And the second thing to do is to bet against stocks when we see bounces in the market or rallies in the market this year. Use them as entry points to bet against stocks, whether that's through short selling stocks or purchasing option plays on them. And the best stocks to bet against, frankly, are stocks that are absolute crap. Not really trying to just bet against the high momentum stocks or the ones with massive trading volume or everyone is familiar with because they're always talked about. But there's stocks that are total junk. A lot of stocks fell 30% in the past couple months, and they're going to decline even more. And other stocks that have financial problems, they've been doing financial engineering, their balance sheets, they have giant debt problems. And that's something I'm focusing on this year. And over the past couple weeks, I created two things to help me do this and to help you do this. First of all, I created a course to help you identify such stocks to bet against, to create potential huge profit opportunities at low risk through options or short selling trades with stops on them. But you got to know how to pick out the stocks to do it, the ones that can fall the most when the market does have drops. And the course has the scans I use to find these stocks. And then I've even created a private Facebook group where we can research stocks together and share ideas this year. So if you want to be a part of these things, click below this video and click the link, and all the information to get started with me on that is there. And also included with those two things is a 30-day trial to the Power Investor service. So if you want to start out this year on the right footing in the markets, so when this year's over, you can look at things and say, hey, when January come, I made the changes necessary, I understood the market was changing, and I adapted, and when you do that, it's a lot of fun. Instead of trying to fight against the trend of the market when it's changed, you're not really understanding what's happening or being confused. If you have the tools and the knowledge and the help necessary, then it's a lot more fun to be trading and investing in the stock market and align yourself with the changes going on. So I want this to be a winning year for you. New Year's is often a time when people make resolutions or make decisions on how they want to set the stage for the rest of the year. That's what I've done myself with my investments. As the year came to an end, I look back on what happened last year, what looks like is just starting this year, and made changes that I needed to make. So that's where we are, and click the link below, and I'll be talking with you some more.